It's Friday, 16th of January, 2026. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every weekday. All right, let's jump right in. We're seeing a really fascinating duality in the market today.
We are. Globally, you've got this tide that's pulling everything higher.
But then here in India, it feels like companies are wrestling with some serious domestic cost pressures
Exactly. So today we're going to deep dive into that very tension.
and figure out what it all means for your portfolio. Okay, let's start with that immediate pulse check. The Gift Nifty is signaling a pretty firm opening.
A very firm opening. And it's reflecting that optimism from some serious global tailwinds.
And those tailwinds are coming straight out of Wall Street, I take it.
Straight out of Wall Street. U.S. indices didn't just recover. They, hit new highs, wiped out those midweek jitters completely.
So what's behind that rush?
It's a renewed, almost tangible belief in the AI boom. And that was sparked, really, by the positive earnings outlook from Taiwan semiconductor manufacturing.
TSMC. So they're more than just a chip maker at this point. They're almost the global barometer for the entire AI revolution.
That's the perfect way to put it. They occupy the ultimate choke point in the supply chain.
So when TSMC says things are looking good, the market takes that as gospel.
They have to. Because that's where the cutting-edge AI accelerators are actually made, the chips that fuel everything. So when their outlook is positive, it validates that AI demand isn't just hype.
Right. It's not just R&D spending anymore.
It's real. It's translating into mass production, high margins, and scaling revenue. And that confirmation is what's providing the global lift you're seeing in the Nifty signal this morning.
Okay, so that's the global optimism. But, like we said, domestically, the story, it changes a bit.
It does. For this earnings season, the focus is shifting. It's moving away from pure revenue growth and squarely onto the margin squeeze.
And we're seeing that especially in India's bellwether IT services sector.
That's where it becomes highly visible, yes.
So let's unpack the numbers. Wipro's Q3 results are projected to show decent revenue growth.
Right, but the market is looking right past that, straight to the margins.
What's creating that pressure?
It really boils down to one fundamental cost increase: the new India labor codes.
Which aren't even fully implemented yet.
Not yet, but companies already have to factor in provisions for the anticipated costs. And these are substantial one-time hits to the bottom line that make profitability a real headache.
And that labor code ripple effect seems to be incredibly widespread.
It is. I mean, look at HDFC Life. Their net profit growth was up only 1% year on year.
And they were also hit by those same labor code provisions.
They were. On top of their own sector-specific issues like the GST adjustment, it just confirms this is a systemic, cross-sectoral factor depressing profitability this quarter.
But not everyone's struggling.
Yeah.
Did any part of the financial sector manage to navigate that squeeze?
Absolutely. The regional banks, especially South Indian Bank, they showed some real resilience.
Okay.
They reported a 9.4% rise in Q3 profit. And that was driven almost entirely by strong growth in their non-interest income.
So fees and commissions, not lending.
Exactly. They found other ways to make money.
That's resilience. In contrast, though, a huge new player, Geo Financial Services, saw its consolidated net profit fall by 9%. What happened there?
Theirs is a different story. It's purely about increased operational expenses. They're in that high-growth, high-investment phase right now.
Just scaling up.
Scaling up tech, personnel, all of that translated directly into more spending, which caused the dip.
So, on one hand, corporate profits are facing this friction. On the other, investment activity, investor appetite, that seems incredibly strong. Where's the money flowing?
The domestic consumption and real estate story is just, it's massive right now. Godrej Properties reported a 55% jump in Q3 sales bookings.
55%.
And collections rose by 40%. That just confirms premium property demand is still really buoyant.
And it's not just current assets attracting capital, right? The IPO pipeline for 2026 is looking robust.
The buzz around the NSE listing is, well, it's deafening. The SEBI chief has signaled that the no objection certificate for the IPO might actually come this month.
And that hint alone caused unlisted shares to surge.
Immediately. And this isn't just a regular listing. This is a major institutional debut that would inject massive liquidity and confidence into the market.
Now, here's where it gets interesting. We saw that mutual fund managers were adding new age businesses like Swiggy and Zomato in December.
Which is a key pivot. And it raises a fascinating question, doesn't it?
Are they shifting away from traditional IT because they're nervous about that margin squeeze we just talked about?
It certainly looks like a calculated pivot, away from stability and towards growth. Managers are signaling they see faster compounding opportunities in domestic digital consumption
In the Zomatos and Swiggis of the world.
than in the slower, policy-burdened IT giants, at least for now.
That's a great segue. Let's look at the broader Indian economic landscape. First, on the trade front, what caused that sudden drop-off in exports?
India's goods traded deficit widened in December. Export growth just slowed dramatically to 1.9%.
Wow, that's a sharp drop from the 19.4% we saw in November.
A huge drop. And it's partly down to continued global headwinds and, tariffs impacting certain sectors.
But was there any bright spot, any sector that bucked the trend?
Marine exports. They were a clear bright spot, showed real resilience, rose by 15% during the April to December period.
Okay, now for the big one. A Supreme Court ruling that just rewrites the playbook for foreign private equity in India.
This is enormous, yes. The court decided that Tiger Global's sale of its stake in Flipkart to Walmart back in 2018 is subject to capital gains taxes here in India.
So break that down for us. Why is this so revolutionary? What were firms like Tiger Global doing before?
Well, they were engaged in what's known as treaty shopping.
Right.
Investment would flow through, say, Mauritius, which had a tax treaty with India that gave them zero capital gains. So they'd set up a shell company, invest, and then sell their stake completely tax-free.
So the Supreme Court is basically saying that that route, the Mauritius route, is closed for business.
Precisely. The judgment shreds that old playbook. It's an unequivocal signal that India is aggressively protecting its tax sovereignty. Every foreign investor now has to factor in capital gains taxes up front.
That is a profound structural change. Okay, moving to the social landscape, a marginal uptick in unemployment.
That's right, a marginal increase to 4.8% in December. But what's critical is the source. The rise was driven entirely by increased joblessness in urban areas. Rural figures were stable.
And looking forward, some massive projections for the energy sector.
Huge. India's power minister projected a potential investment of around $450 billion by 2032.
A staggering figure.
It is. And that capital is earmarked for a massive transformation across generation, transmission, distribution, and crucially, energy storage.
And on the diplomatic front, some positive signs.
There's renewed hope. The Commerce Secretary said an India-U.S. trade deal is very near. No deadline, but positive language. And Russia's also betting big on non-energy ventures with India across IT, shipbuilding, and so on.
Okay, let's pivot to global markets. The biggest swing overnight was in crude oil.
A very big swing. We saw the swift unwinding of what analysts are calling the Iran premium. Prices settled down significantly, fell 4% in the last 24 hours.
So explain that for us. What exactly is an Iran premium and why did it unwind so quickly?
So a risk premium is basically a buffer that traders add to the price of oil to account for a potential supply disruption. With the tensions in Iran, the fear was that the Strait of Hormuz could be blocked.
A critical shipping route.
Critical. So the premium was the extra price added to cover that fear.
And what made that fear and the premium just disappear?
It was directly tied to communication from Washington. U.S. President Trump's more moderated tone on the Iran protests just eased those immediate fears of a military conflict.
So as soon as the market believed military action was less likely,
the risk premium was immediately pulled out of the price, hence the 4% drop.
And how did that stability affect gold and the dollar?
It boosted the dollar. The U.S. dollar is actually poised for a third consecutive weekly gain. Gold, on the other hand, slipped a little, about 0.1%.
And that's driven by strong U.S. economic data.
Exactly. Yeah. Lower than expected jobless claims. Good economic news makes the dollar more attractive and reduces the demand for gold as a safe haven.
Now let's look at China. Internally, things look a bit weak.
They do. They reported the smallest amount of new bank loans extended in a year since 2018. That's a clear sign of sluggish domestic demand.
And yet, despite that, they posted a record $1.2 trillion trade surplus in 2025. That much cash creates its own risks, doesn't it?
It absolutely does. This enormous surplus is fueling massive private overseas investments. So capital control is shifting from the state to private hands.
And that introduces a risk of sudden financial reversals.
Precisely. If that enormous pool of private Chinese liquidity flows out suddenly, it can create sharp, unpredictable swings in global asset prices.
Back to Iran, India is responding to protect its citizens.
Yes, preparing a mass evacuation of 10,000 citizens. The first flight from Tehran to New Delhi is actually scheduled for today.
And that instability has an immediate impact on logistics.
It does. Air India and Indigo have been forced to reroute long-haul flights away from Iranian airspace, taking these complex alternative routes over Afghanistan or near Iraq.
Finally, we saw a really unexpected escalation up in the Arctic.
A truly unique development. Tensions are escalating between the U.S. and its European allies over Greenland.
Over Greenland.
Yes. After high-level talks flopped, European troops from France, the UK, Germany are arriving in Greenland to reinforce Denmark.
So this is NATO allies basically squaring up against another NATO member.
It's a very unusual sign of strain within the alliance. Copenhagen sees the U.S. acquisition threats as a territorial red line, and their allies are showing up to support them.
Okay, let's wrap up our deep dive by turning the lens to the future, our technological innovation of the day.
We're looking at a breakthrough in medical diagnostics, specifically hematology, using a new generative AI system.
What makes this one different from other AI tools we've seen in medicine?
It's the confidence and accuracy. It's surpassing human specialists. In hematology, it's analyzing blood cells to detect the very subtle early signs of diseases like leukemia.
And it can spot things a human eye might miss.
Critically, yes. It can spot rare, nuanced abnormalities that humans often miss because they just don't fit known patterns.
And that's where the real clinical value lies, right? That early, accurate detection.
Exactly. It's showing how AI is moving from theory to direct, high-stakes clinical application.
And this kind of innovation fits perfectly with India's strategic vision for tech.
It does. This is exactly what the UPI for AI mission is about, delivering population-scale, real-world problem-solving applications under the India AI framework.
A final thought for you to chew on. Consider how the Supreme Court's definitive ruling on tax sovereignty, targeting major cross-border deals like Tiger Global's exit from Flipkart, will fundamentally restructure the risk-reward calculus for every foreign private equity firm looking at the Indian market this year. Do they simply absorb the tax hit, or will this deter investment flow entirely? And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.